Today I will talk about what are the impacts of inflation on the stock market. Inflation is inevitable, but what is inflation? The price increase rate over a specific period is known as inflation. Before going further, please subscribe to our channel to get more such informative videos. Let's talk about what are the impacts of inflation on the stock market. Inflation is quite unsettling for a country's economy. A few key things can help you understand what inflation really is and its impacts. For better understanding, let's discuss how inflation is associated with the stock market. First, remember that inflation is the primary reason people invest in stock market. American inflation has averaged 3.25% yearly from 1914 through 2022. The S&P 500 index has returned an average of 10.49% year from 1926 to 2021. Long-term investing allows you to accumulate money and keep up with inflation. There is no direct association between inflation and market returns, even though inflation has a net negative effect on the markets. High inflation rates have resulted in positive and negative stock market results. Inflation is only one of the many variables that affect stock market performance. How has Russia versus Ukraine war propelled inflation? Russia is a significant energy producer, thus the flow of oil and natural gas to the international markets has been uncertain for some time. The oil price has already increased due to this diminished supply reaching levels not seen since 2008. Rising energy prices worldwide will undoubtedly impact the domestic economy, adding to the agony at the gas pump and raising the cost of operations and the goods they create. Additionally, Russia and Ukraine jointly produce around one-third of the wheat exported worldwide. It means already high prices of groceries over the previous year will continue to rise under additional pressure. How inflation affects the stock market. While we should not become alarmed about inflation, we should be aware of its effects. The sudden increase in inflation can cause market volatility, as we have seen in recent months. Expectations of future earnings by corporations serve as a major foundation for stock prices and stock market returns. It can be challenging for the market to determine the current value of the companies that comprise markets indexes, as inflation depreciates the purchasing power of a country. The effect of inflation on bond and cash yields. The implications for cash and bonds are another reason you should be highly cautious about inflation. The value of money gets significantly diminished by inflation, given the current low interest rates and nearly non-existent returns on savings account. Similar to equities, fixed income investments like bonds can perform poorly during rising inflation. There is a discrepancy between the interest rate an investor receives and the inflation rate. When inflation is 7%, yet a 10-year treasury bond pays 2% interest. For instance, the implied real return is 5%. This can result in a decrease in the bond's value. So it can be seen from the above discussion that inflation plays an instrumental role in deciding the fate of the stock market. These two aspects are closely interrelated.